see people make profits
Yes.
From insurance.
Yes.
But still people do that. So
Yeah.
what do you think about it?
Well, that's a problem with the companies, insurance companies, the claim they approve, and the ethical background. Okay, let me share with you my personal experience. Back in 2007, when I met with my first car accident, it was a minor accident. Okay, my mistake. I went and knocked another guy. He was a good guy actually. If not, I would have been in trouble. So at that time, the cost of repairing the car was 5,000 rupees. 5,500 rupees if I'm right. But the insurance agent who visited the spot online at that time on site approved, if I'm right, 11,000 rupees. And I called this guy and said, hello, the garage is only asking 5,500. Why the hell have you approved this one? Yeah? Because it's a violation of the principle of indemnity. And he goes on to say, sir, this is the amount we have approved and you are entitled for it. And I said, again, it's wrong, right? No, sir, this is the amount we have approved, we are okay with it. So I was like, you are the people who are supposed to follow the principles. Whereas, yeah, we have to, be okay with it. So it's wrong. It is wrong. Yeah? Right.
So in scenarios like about this insurance thing that you spoke,
Yeah.
In life insurance, when it comes to life insurance, like can we have more than 2-3 policies? And if in case, like, do we have to exactly die to enjoy the policy?
First of all, if you have 2-3 policies for yourself, if you die, you won't get to enjoy. Number one. You'll be dead and gone. Okay? You will be dead and gone. Yeah, someone else whom you have nominated will enjoy the benefit. So, what I have seen is, now when if these policies are given after medical checkups and they analyze your risk and everything. So, if the client dies in a very tragic way, then according to the policy, a higher claim can be paid. That is why there are so many documentaries in platforms like Netflix and YouTube and so on and so forth, where we hear true stories about the husband trying to kill the wife trying to kill the husband just to get the insurance. Because when the moment the death is a tragic one, it's a serious one, the claim is high. So humans, knowing they love money so much, they would basically do anything, yeah, just for the money. Yeah, you guys understood it?
Yes.
Thank you. Okay, so now let us go into the next concept. In an insurable risk, there's a concept called unconnectedness. So what do you mean by this unconnectedness? One loss or risk shouldn't be connected to another. It doesn't make any sense. Yeah. So let me tell you a story. Okay, before going to the story, first of all, what is risk, Pudha? The probability of incurring a financial loss. So risk is always a what? There must be a probability. What is the probability? It may happen, it may not happen. There should not be certainty. There shouldn't be any certainty. So I'm going to tell you a story. There are two people called Albert and Bertie. Okay. So Bertie, who is the owner of this yellow car, comes from behind and knocks this ash color pickup owned by Albert. So Albert is the affected party, Bertie is the accused party. So according to the common and civil law, the person behind this mess, who is Bertie, should compensate Albert. Why? He is the one who did wrong. So now Albert has come out. This portion of Albert's vehicle only was damaged by Bertie. So Bertie or Bertie's insurance must pay for the loss of this portion. Now, few days ago, Albert, while he was driving somewhere, had knocked this portion of the vehicle on his way. Now Albert is thinking, Bertie is calling the insurance company. Yeah, I might as well tell the insurance company that because of Bertie, my vehicle suffered a loss somewhere here in the front also, so that I can get a claim. Is Albert a good guy or a bad guy? He's bad. Why? Because of Bertie, he suffered a loss only somewhere here. Yeah. So either Bertie or Bertie's insurance company should pay only for the loss here. This happened several days back. Yeah. So he is trying to cover it up through this incident. So what is unconnectedness? This loss should be independent from this loss. Why this happened from the mistake of Bertie, this happened somewhere else. So he is trying to cover up some other loss through this, which is but a violation because it's not an insurable loss. Yeah. So that is unconnectedness. Now let us go back to the definition, and I hope you will be able to understand it. So what is unconnectedness? One loss shouldn't be connected to other insured losses. There should be a connection between. There should be a connection. Yeah, the losses should be independent. So for the loss Bertie caused, he should pay, or his insurance company should pay. There is no doubt about that. But for the loss of the front end, who do you think should bear it? Yeah. Here?
Albert.
Exactly. Albert has to bear it. So now children, I want to ask you, what do you think Albert should do in a situation like this? What do you think? It's true that he is the affected. Should he get a claim for the front accident? Yes or no? Yes or no? No, he shouldn't. Yeah, as an ethical human being, he shouldn't. My next question. Have you come across people like Albert in life?
Yes.
Who try to cover all their losses through you? Yeah.
Yeah.
I believe we all have met people like that. Yeah. Don't need to go too far. You give some money to a friend who asks you to come. And imagine the difficulty you go through to get that money back. Yeah. You will have a time, no? Something so good friends. Yeah. Good friends, good times.